Hi, I am Ram Pratti, the Director of Center of Excellence. Today we are going to have a panel discussion on CCAR and BCBS. We have an industry expert in SME, Simon, and we have our financial services pre-sales experts who have a lot of experience in proof of values and pilots in the CCAR and BCBS area. So one of the things we observed is CCAR and BCBS are looked into a different initiative when you go into a lot of banks, a lot of the financial institutions. How do you guys see in your implementations of the pilots? Do they see individually or they come together?
I would say what I see a lot of times in them is that they start off individually in a lot of cases that, especially in the smaller organizations like the DCIBs and the smaller sized banks, they will become more individual cases where they'll start off with CCAR, their main critical data elements that are causing them to have issues. And then as they are maturing, they will bring into some of the BCBS principles as well. And Koen, I know you've worked on some of the larger banks, and it might be
it's what I've seen is very different from one organization to another. You have some that do it very siloed, some very tactical. Like we just need something to get us through this BCBS requirement, which is obviously not the right thing to do. The good ones use it to actually establish data as an asset, and they start with completely enterprise-wide programs. Those are also the ones that are successful. So it varies a lot.
So we recommend them to be together. So what is your experience them in bringing them together, and what is the benefits as a client they get running those programs as one?
Definitely seeing convergence of BCBS239 and CCAR programs. I think in many institutions they were originally viewed as separate programs, but the benefits of combining them are really compelling. Institutions are looking to establish sustainable data governance programs. The BCBS 239 principles make sense for data governance regardless of which data you want to govern. And I think the other compelling factor is as the regulators adopt the BCBS 239 principles more and more as the standard they're using when they assess the CCAR program and other reg reporting, it makes sense to align to the BCBS 239 so that you're aligned to regulator expectations. So absolutely, I think convergence of the two and leveraging the BCBS 239 principles as the foundation for data governance broadly and specifically using CCAR as one of the initial use cases and the priority use case.
So one of the comments made by the CCAR members was those principles are built to help the banks by themselves. Right? So how do you think these applies to only CCAR or any other regulatory reporting, and how you see in the banks when you worked?
The 239 principles, I think, they're very helpful for an organization that needs to establish a data governance program. The principles for a regulation are actually quite common sense. When you go through them, they're written in plain English. They're easy to understand, and it's hard to disagree with any of them. So I think for that reason that it makes sense to adopt them for a data governance program.
That's why non-banks that we work with use them as well as their principles. And the other thing I wanted to add is if you read any update report of Analyst or the Big Four or so on, they all say that this is just the beginning. So every organization should be gearing up for more of this, and anything that they submit or even not submit, but you propose or use internally, will be looked at from the regulator through the lens of BCBS. So
yeah, I've worked with companies which weren't CCAR banks, and they were being asked the same BCBS 239 driven questions that the CCAR banks are asked, starting with. So it shows the lineage of where this data comes from in, say, the FRY9C report. And then once you can show the lineage, if you can show the lineage, then it shows the process controls and the data controls that you have in place. And those can be very challenging questions for any organization. But again, it's the alignment of BCBS 239 for reg reporting broadly, whether you're a CCAR bank or not. Even if you're not, as Koen said, even if you're not in the banking industry, it makes a lot of sense. We're starting to hear about what we've always described the trickle down of regulation. So starting with the large banks, those become the standards and expectations for smaller banks over time. We're definitely seeing that with BCBS 239. We're seeing the regulators now start to apply the BCBS principles to other reporting types. So AML, seems to be one of the areas that they're now starting to focus on. So for your AML reporting, show us the data governance that you have in place. Again, that the regulators seem to be referring heavily to the BCBS 239 principles when they ask those types of questions. And then we're even hearing instances in Canada now where insurance companies are being put on notice that they're going to be expected to be BCBS 239 compliant. So that's a different industry in a different geography to the US, where a regulator it seems to be looking at those principles and saying, these are as good guidance as we've got, and we also think that they're the type of standards and processes that we expect our insurance companies to be able to adhere to. So
similar principles.
Yeah.
Yeah, I think so. I mean, even on that case with insurance companies, I know myself, even a couple of now the larger insurance companies in the U.S. have also looked at that and said, let's start to leverage the BCBS 239 principles to enable us on our reporting. And a lot of cases too, it wasn't even necessarily the regulatory reporting. It was also what they would call their internal reports or their board reports. A lot of the opportunities I've seen on that side as well.
Well, I think that's actually a really important point, because obviously the BCBS 239 principles, they're directed at internal risk reporting. But what we see when the regulators do an examination is they don't expect that banks are only going to apply it to the data that is used for internal risk reporting or that's used for reg reporting. They want to see that this is part of the development of a governance program which will be deployed ultimately across all of the bank's data. You just need to prioritize how you deploy it. And so I think it's also important to recognize that this is a longer journey than just addressing the CCAR need, the 9C need, or even an AML response to the regulators. And one of the ways of keeping the regulators on board or trying to manage the MRAs is to demonstrate that you're committed to expanding those principles to non-regulatory data and to data that you're using for internal management reporting.